Good morning, all. Good morning, all. Rally traders, if you can hear me, please kindly type audio in the chat. If you can hear me, kindly type audio in the chat. All right. So that means we all can hear me loud and clear. Well, the class ought to start for now, but considering the number of participants I have right now, I think it's fair for us to accommodate additional 5 minutes or thereabout for those that might be trying to connect right now, those that might be struggling with their network or any other technical issues, so that we can carry quite a lot of persons along. So please exercise patience for additional 5 minutes or thereabout. Then we'll kick off fully. So please, I might be silent for a while, but that's because we're trying to accommodate those that are trying to connect right now. We'll start in a bit. Thank you. All right, while waiting, I can see a question already from AY. Yes, you can open a dollar account as well as an NGN account, a Naira account. If you're having challenges opening a dollar account, it might just be a technical glitch from your end. So please kindly reach out to your account manager to help you look into this or guide you right on the approach. So please, AY, kindly reach out to your account manager to resolve this for you. Hello, people. We have just 40 persons now. I'm concerned. Are we still in the holiday mood? This is Wednesday. Public holiday ended yesterday. This is money making week, money making day. How come I have just 44 persons? Can we still accommodate another 5 minutes or do we just go ahead? Let's take a quick poll. Do we give additional 5 minutes or should we go ahead? All right, I'm saying go ahead. Let's go ahead. I know I can take the decision, but I'm trying to make it democratic. This is a democratic dispensation. Okay, 5 minutes, please. Go ahead. It's a go. 5 minutes. Okay, 3 more minutes, please. Okay. Move on, they'll join us. Okay, 5 minutes is fair. All right, this is a very smart response here. Since it's a live stream, people can always fall back to the recorded one as it's going to be on YouTube for later on. So I guess it's best to just kickstart and get right into it. All right, good morning. My name is Olabisi Olalero. I'll be your facilitator for today. Welcome you to Raleigh Academy's morning market review, where we assess, analyze what the market has been like, what the potentials for trade should be that day, or possibly for the remainder of the week, depending on how it's been. All right, so that being said, at the beginning of every of this class, I always like looking at the market from two major perspectives, the fundamental analysis and the technical analysis. Looking at the fundamentals, there has been some talking points. But first of all, let me ask, can you even see my screen? If you can see my screen, please type screen. The right top of my screen is showing fundamental analysis. Please, anyone that can see fundamental should just type fundamental or fund or F, or you can type F for fundamental. I want to be sure you're seeing where I am on the screen. All right, fundamental. Thank you. So talking about the talking points as it is currently in the market, majorly the dollar index, the dollar has been mixed with sentiment over inconsistent releases. And there has been some anxiety also regards to the upcoming election. All of this has also had a way of what unsettling the current sentiments in the market. There has been a plunge up and back down in the past few days, a week to now, really associated to the values gotten from the CPI, the PPI, and even the unemployment claims data. And all of these have had a way of making the dollar range and have some inconsistent movement. The dollar is no longer in one direction across board. You see that by the time we move on to the chart. So what are those things that investors are looking forward to right now? The fact that the next FOMC meeting is end of next month does not make this easy on most persons, knowing that that's where we can get a clear part of the projection of what the plan of the policymakers for America is. But there's something closer that can help us have an insight towards that, which is the fact that Powell, the chairman of the Fed, is going to be having a semi-annual testimony in the House by July 9th. And this should give a clear depiction of what the last 6 months, the mid-year performance has been, and what the next 2 quarters will look like. Even though there's already pointed towards the fact that there's only one rate cut expected for the remainder of this year, which are indications towards good economic pickup. But any year where you have election, especially when you're getting closer to the election, in the case where it is, where Trump is trying to fight his way back into the White House, and Biden doesn't seem to be controlling the strength as it is. So there's this tug in between both of them. And these are part of what is weighing in on the sentiment in the market as regards any of the dollar related instrument right now. And then also we have the usual weekly fundamentals. So I'll be moving to Forex Factory right now to look into some of these fundamentals that we can take key for the remainder of this week. So I'm switching over to Forex Factory. I'm on the web browser now on the Forex Factory page. Please, if you can see the Forex Factory calendar, kindly type Forex. Hello, if you can still hear me. All right, so now you can see the Forex Factory page. All right, so let's move on. Hope I'm not too fast. If you think I'm fast, please kindly type fast. If you think the speed is okay, just type okay. All right, we have enough okay, so I think we can continue with this speed. All right, looking at what fundamental has been, let me point out the real pointers here. The NFP on the 7th came out good, as you can see here based on this data. Only the unemployment rate seems marginally conflicting, in which case I believe that is basically a function of what we call voluntary unemployment. And by the next week, which was last week in this case here, you can see that the core CPI and the CPI all came negative. So here's the concern. How can people have increased average hourly earning and the CPI lessens? Let me explain that. Average hourly earning is the mean value of household returns, what people earn by every person working in the US, considering the private sector. And the CPI, the Consumer Price Index, is a measure of the purchasing power of the household. And it's also expected there's something called the MPC, the marginal propensity to consume, which is a measure of the rate of consumption of individuals based on an incremental value in their income. Meaning if you're earning 100K before and you're spending, say, 75K and you're keeping 25K, if you move from 100K to 150K, it is expected that somehow your expenses will also increase. It's expense income theory. It's an economic theory that indicates that as your income increases, your expenses and consumption finds a way to increase also. Either because you are changing the demand or the quantity demanded. Changing the demand means I used to drink pure water before, but with my increased salary now, I can afford to be taking bottled water. Hence, you have changed your demand. Or I was taking bottled water before, excuse me, but with my increased salary now, I can afford to now take bottled water multiple times and don't revisit half or the unused or the remaining bottle water anytime I open it. That is increase in quantity demanded. So it is just expected that typically when people have increased salary, their purchasing power should also increase. Some of those needs you could not meet before, you'll be able to meet them now. So it's now conflicting to see that previously during the NFP week, average hourly earnings showed an increase. Then how is it that the CPI also showed a drop in value? But one thing you should keep in mind is this, that the CPI measures the totality of the activity from the previous week till after the NFP, the average hourly earning. So it might be a delayed response from the average hourly earning before it gets added into the value we're seeing right now. But there's a conflict somewhere. So it is enough to see why there are possibly sentiment and confusion regarding the strength of the dollar in the markets. So for this week, as of today, nothing is coming from the USD. And even the JPY high impact news we have today, the CPI is flat. A drop from the previous of 2.3, expectation of 2.0, and is at that same 2.0. And looking at what we're expecting this week that may tend to add or solidify the strength of the dollar is tomorrow, the unemployment claims. If the unemployment claims for tomorrow increases, that goes to truly show that the unemployment we saw, data we saw from 2 weeks ago, is a function of voluntary unemployment. That is when people feel that with or without work, their basic needs will be met, which is one of the drawbacks or the criticism or argument against welfareism economics, which is the fact that when you have increased social benefits, people tend to fall into the trap of what? Dormancy. Take, for instance, that whether you're working or not, the government promises you, say, 50K for feeding, 20K for transportation, 30K for miscellaneous expenses. That's 100K coming in whether you do nothing. People will tend to stick to that rather than stressing themselves to get a job. Only very few people will still struggle to get a job. So this year is the fundamentals that might possibly change the narratives for the USD and we'll still expect some other European news later on in the week, especially on Friday. But also keep in mind that the French election is also creating some upheaval in the euro strength and euro activity, with France being the second largest economy in Europe right now. That is also a concern for the euro. So now let's move to the chart and let's see what price has been doing. And based on technicals, look for some possible trading direction and trades that may give us profit today or later on in the course of the week. So I'm moving on to the chart right now, and I'm sharing my screen to show what the chart is like. So please, if you can see chart on your screen, I need you to type chart. I've moved over to the MetaTrader. If you can see the chart, all right, thank you. You can see my chart. So let's forge ahead. Look at the 2 periods I was mentioning here. You can see this surge here in the dollar index. I'm on the dollar index right now, which is the measure of the strength of the dollar across a basket of currencies. You can see that dollar had a sharp rise here, which was the 7th of June. And that was the offshoot of the NFP. That's a Friday. And now you can see that after hitting this peak, the dollar found its way back down on June 12th. That's when we had the CPI news, dropping the value back. And somehow has found its way to rally back to that same peak it made on the back of that increase on June 7th. And since then, price came back down, and you can see that price has been held somewhat in a range. So now let's go to the currency pairs and some other instruments and see the dollar performance. On the H4 here, you can see that the Euro USD broke down here. But going to the lesser time frame, you can see what we see here. Dollar is gradually finding its way back up. Let me shade a new trend line. From what you can see here, on the higher time frame, this is a trend line here that shows that price broke free beneath and has been held down. That there is a good take profit point for your movement up. Price as it is right now is gradually following the formation of an uptrend on the Euro USD. I'm on the Euro USD, please. Euro USD. Price is following what? The tenet of an uptrend and has gradually been making higher highs as it is here and higher lows also. So we're expecting price to continue back in that direction. It's not enough for you to see a buildup of an uptrend. You also need to be smart enough to look for a right entry point. So meaning on your Euro USD as it is, look for now, look for possible what? Trade in the bullish region. So let's go to lesser time frame to see whether there's a good entry point to see where trades can be picked up on this. Based on what we have here, you can see that price is comfortably resting on this trend line here. So you can also sketch the same at yours. If price should break beneath this particular trend line, please don't rush into that trade. Wait for a retest. Allow price to come back to retest that trend line and expect price back on the downtrend, because we have a verified resistance here, even though it's at a lesser time frame. Hence, it might not be too dependable. On your 30 minutes and H1, you can see that there's no resistance at H1. On 30 minutes, there's a weak resistance. But price, before that, had a bearish engulfing candle. If you can see here, I'm going closer now for the Euro USD. Here is a bearish engulfing pattern to this particular candle here. And you can see a clear rejection sign of price. The meaning price is about to go downward. But rather than rushing into this now, you can see it's gradually breaking this trend line. Allow this current candle forming on 30 minutes, close beneath, or even on your 15 minutes, you can go down to your 15 minutes to also see that. Allow this current candle forming to clearly form below here and wait for a retest at this particular trend line here. And then you can follow price going back down. In which case, when that happens, your possible take profit point is somewhere at this verified support down here. That's around the region of 1.07115 It's 1.0059. That is a tenable take profit level from where price is right now. And if you measure that, that's about 20 pips. It can go further than that. But what I'm saying is to take it conservatively. That should be enough for you on this Euro USD trade. And if price is on the upward, allow price to break above this resistance as you see it here, meaning price must be above at least price level 1.07443. When price breaks above it, then you can consider a long trade, and your first or your closest take profit is about 15 pips, and it breaks beyond there, then you can think of price coming as far as this higher verified resistance here at price level 1.08121. So those are the resistance support level where you should target to set your take profit and possible stop losses on your trade. Also, if you're trying to protect yourself, have a tight stop loss. But the values I've given here are indicative of where your ideal take profit should be. So moving on, let's check USD CAD. I've moved over to USD CAD right now. On USD CAD, look at what we've seen about this formation. Price down, price up. Price has been in a range in recent time. And going to H1, that clearly indicates it better. Even though it has more of a downward formation if you shade your going by this trend line, you can see that your USD CAD is on a downtrend. Euro USD was coming down and it's still forcing its way back down, showing the strength of the dollar against the euro. But for USD CAD, you can see that the price is tending downward, indicating the strength. Why the technicals are not fully directional in this case here, because ideally, if the dollar strengthens, it should strengthen across board. But that seems not to be the case. Please, as a confirmation, can you still hear me clearly? If you can still hear me clearly, please type audio. All right, let's continue. Price is also resting on a verified resistance on support rather on the H1. So now, how can we look for possible trade entries? Ideally, looking at what we have here, we need to wait for this resistance to be broken first, or for a smart trader, target a sell limit at this trend line point here, because if price surges higher to this point, it should still come back down a little. And you can also sketch a horizontal line here to be able to gauge price, so that as price is making this movement, you can look for a breakout easily. So going to the lesser time frame, you can see that the verified resistance at the top here is still obtainable, and the trend line is still right there to instrumental. And look at, we have a proven support with 7 test count. That means price has hit this 8 times, because the first count is not always indicated, because that is not put into the equation. It's always T minus 1. So we have had price test this place 8 times, and it has been strong enough to hold price. So for someone targeting to scalp, you can look for price getting to any point on this particular proven support here, and look for what? Some buy trades around that area, waiting for retracement of say 10, 15 pips. And that's depending on your lot size and your risk to reward ratio, could give you something reasonable. Look at this 14.6, that's 15 pips from this point here. Or wait for price to break below here before you can plunge into any trade. And if you're also trying to protect yourself on that trade, you realize that from where your entry point is, your stop loss should be about 6 to 7 pips, which really follows through on your risk to reward ratio settings for price movement. So for USD CAD, draw your trend line at the upper level as I've done here, and look for price hitting there to come back down, or wait for price to hit back this proven support level as you have it here, and wait for a retracement of price going upward and make some small pips on that, tight stop loss, and look for take profit at the upper level. Moving on to AUD USD, you see that the same is obtainable here. The reverse of USD card is happening here, but a continuation of what we've seen on what? Euro USD. That price is gradually tending downwards. USD is trying to what? Recover strength here. Let's sketch a trend line. Let me change the color of this trend line so that we can see it clearly. Let's set it to blue. Possibly increase the thickness a little. All right. Based on the trend line right here on the AUD/USD, you can see that our price is going to be pushed down the moment it hits this trend line or at this verified resistance, which created this breakout here or failed breakout. Let me zoom in a little and point what I'm saying. This candle here is an abnormal one, same as this bearish candle here. And the moment price went above it, you would have expected that this trend line, which acts as a dynamic resistance in this case here, should have held price above. And you can see this doji formation here with the resistance holding it down. And look at the bearish formation here. And price has been going rejection sign up until this point. But because it hits a verified support also, price is tendering upward again. So this should not be surprising. So for any smart trader right now, what you're looking at is price hitting this trend line and headed back down, or target this verified resistance level as a return point. But this is on the higher time frame, H4. How about we go to H1 and 30 minutes and see what that translates into for our trade? See that on 30 minutes, price is already at a resistance that has already peaked initially here. So price could also come down from here, but you're more confident if you allow that price gets to this trend line sketched here. That means if price goes above this current resistance, breaks it up, hits this particular trend line, price is expected down. But rather than rushing in, wait and see whether the trend line will be breached and price will go above it before you can look through for what? An entry level on your AUD/USD. Zooming out a little, let's see whether we can have a separate sketch on the lesser time frame. On the 15 minutes, I'm trying to sketch out a possible channel. You can see a price range within this channel here before breaking free. And after that, it came back and rested on the upper bound of the channel, which also is a trend line, and pushed price up. So that is to let you know that as price is currently now, if you want to play a smart one, don't plunge into a trade right now. Allow price come back down and rest again on this channel upper bound, which is at price level 0.66522, which is just about 16 pips from the current price. And if that happens, you can also target a buy limit from that point, or as price is headed up here, to target the higher level trend line from the H4, which will also serve as a resistance to it. This now is giving us a symmetric triangle formation from this channel and this independent trend line, that as price is moving, it should range within this bound until it breaks above or below. So whichever way it breaks through, for those looking for a swing trade, wait for it to break either above here or below here. But if you're thinking on scalping, making some 15, 20 pips as the case may be, if price comes down here just about 16 pips to touch on this particular trend line here, you can take a buy limit and allow price surge up and look at the take profit at this level here. So that is that for AUD/USD. Let's look at USD/CHF. All right, for USD/CHF, surprisingly so, you can see that price has been going down. And that normally connotes the strength of the CHF, but not in this case. It's rather the sentiment into the point that people think that there's a possible inherent weakness in the dollar, not the strength of the CHF itself. As a rule of thumb, anytime you want to really assess the strength of the dollar, the CHF has been taken to be the weakest of all of the currencies. So anytime the CHF drags the dollar down, that's an indication of a clear weakness rather in the dollar. So this is also upheld here today, seeing that USD CHF has been on the downturn on H4, going lower on your H1 and 30 minutes. The same thing is still obtainable. Price has been on a downturn. So at what point would you look for a possible good trade on this? And let's see. But I want to confirm something to see whether we have a divergence formed already. So let me change the view to my divergence view and see. There's no divergence here. This is just typical normal movement on the H1, same as the H4. So we can rule out any possibility of a divergence and look for what? Just normal trade. So let's go back to the previous view. Price is in a very tight range here. So I wouldn't suggest anyone to plunge into any trade as regards USD CHF. If you're thinking of any possible trade on USD CHF, price needs to break above or below this indicated point. As you can see here, that's 0.88300 or 0.88530. Price needs to break below or above that before you can have any confidence on any possible trade on your USD CHF. So let's move over to gold. I've been seeing some instruments being dropped on the chart. So let's work with gold first. Gold also has had some conflicting movements, as you can see on the chart here. It peaked in recent time to this level here. That's at 2449.62. And that has been since May 22nd. And price has been on a downturn. And also, as you can see here, this is 7 when the NFP came good for the dollar. And for those of us that know, that indicates the strength of the dollar. And anytime the dollar is strengthening, we all do know that there's a negative relationship with what? Gold. So look at how price has acted within that period. Price broke out of this range, surging downward, and price is being held here. Always keep in mind, let me insert a shape here, but there's no need. We already have a verified resistance there indicating it. Because what I was trying to point out is the fact that price most times stays as a zone or range. I've adjusted that to indicate that price has been held down. I see 1, 2, 3. Let me connect that with a trend line. This is on the higher time frame. I'll still go to the lower time frame. I just want to sketch this so that by the time we're going to the lesser time frame, we can still see them play out. All right, on the lesser time frame, we can see that the trend line is still holding it bound. But likewise, let me sketch another trend line here from what I can see here on the H1. Price has also found its way to build an uptrend formation. And has had to failed breakout. So we have the formation or a build-up or a symmetric triangle in the sense that price in one corner is showing possibility of what? A downtrend, having series of what? Lower highs. But guess what? On the other side here, is showing or walking through in cognizance with what? The direction of an uptrend, which is what? Higher lows. So we're having higher lows and lower highs, meaning on both trends, it is failing on one side and passing on the other side. For those of you that are confusing what I'm saying, let me repeat. For a downtrend, you need series, at least 2, of lower highs and lower lows. Look at, in this case here, we're having lower highs, but we're not having lower lows, meaning it failed one of the tests, but passed one of the tests. For uptrend, you're going to have series of higher highs and higher lows. In this case here, we are seeing higher lows, but we're not seeing higher highs. So that means we're confused into which it can be of the two. So hence, what was sketching 2 trend lines together, almost like drawing a channel, but in this case here, the trend lines are in reverse order. One for downtrend, one for uptrend, and they intersect at a point ahead. And that lets us know that as price is moving, we're gradually trying to see what price build up will be. Look at price is hitting here, a verified resistance, and the upper bound for this trend line. That is a good time to plunge into some short trades or look for sell trade opportunities and give a very tight stop loss, being the nearest high on this trend line here, which is this middle point. This is where your stop loss should be, which is about 39 pips from the current entry if you choose to start your trade now. And if you do so, from this current point here down to your closest take profit, it's about 120 something pips, which is quite sizable considering the instruments you're on. So this here is your right way to look for a possible trade on your goals today, but we can go lesser also to still see what is obtainable. On 30 minutes now, you can see that the same thing is still obtainable. Price is struggling at a verified resistance at this upper bound. Even though there's a very close verified support here, but I will not take it to this much because on lesser time frame, I'd rather work with the one that coincides with the higher time frame. Hence, why I can still depend on this verified resistance at the top, but not this verified support at the lower level here. And price should gradually tend towards this lower bound here. Even on 15 minutes, let's still see. Let's move this Fibonacci here. You can see that the same thing is obtainable. There's still a verified resistance there. Price is struggling at this upper trend line and will gradually come down to this level here. So you can reason that towards gold. Let me check the chart. Okay, USD JPY. All right. Please, for those of you that have dropped questions previously regarding instruments, you might want to drop them again so that I can see which of the ones we might switch over to. I can see USD JPY, Euro JPY, GBP USD, AD JPY, GBP JPY, Euro GBP, oil. I'm trying to make an assessment of the predominant ones that will determine the one we're picking next. GBP USD, D30, oil. Mr. Olugbenga Babatunde, repeating oil does not mean I'll count it as two. I'm associating it to the names that are dropping it. Or someone is asking, what is the default account lot size in rally trade? With every broker, default size is the standard lot size. Standard, that's why it's called standard lots. But you can also trade fractional value of it. So if you mean what is the minimal lot size tradable on our basic and standard account, you can trade the least possible lot size, which is 0.01, which is a micro lot size. But on our pro account, the least lot size is 0.1, 1 mini lots. So that should answer your question. Thos Popson. Thos Popson, that's the response to your question. FRA 40, USD JPY. All right, I'll go over to USD JPY with quite a number of USD JPY. So let's move over to USD JPY charts. All right, from USD JPY now. H4, price uptrend. H1, same is still, though price is struggling at the top here. So for USD JPY, let me sketch out something here. Even I can comfortably just draw a trend line, but I've sensed from this shape here, it looks like there's a channel build up there. All right. On USD JPY, this is on H1. If you can see my chart, so let me go to lesser time frame. You'll realize that price has been in this particular channel, even when it initially broke out of it, came back into that channel and has been held 1, 2, severally at that point. So it wouldn't be wrong to also take the fact that at this lower level here, price might find its way back up. So what you have to do is this: you can set or make an instant execution as case may be, set a very tight stop loss at this low here, this closest low here, and allow price surge up on its way up. And that should give you from this current point here to the upper level here, that's about 60 something pips. But you don't have to wait till the upper level because there's a verified resistance at the top here. So look to catch up some 45 to 50 pips on USD JPY. So that's USD JPY for you. Price is in a channel, is at the lower bound of that channel. So expect price to go up a little and then set a very close stop loss. This is how you consider that. Let me zoom in on the bullish candle before this current forming candle, and you will see that this shadow here is an indication of what? Rejection at this level. So price is tendering upward for the USD JPY for today. So let me go back to the chart and look for another instrument there. All right, someone's question is, what's the minimal lot size to use as stop loss? You don't use lot size as stop loss, please. Let me correct that impression. It is pips value differential or movement that relates to stop loss. What that means is this: if you have a trade ongoing, you can set your stop loss as 10 pips, 15 pips, 20 pips, as the case may be. But also realize that the farther away the stop loss is to your trade, based on your lot size, the higher the monetary value in currency notes. Meaning, if you have one micro lot and you have 10 pips stop loss, is going to be lesser than someone with one mini lot, even on 5 pips stop loss, because a mini lot is 10 times of a micro lot. Hence, your stop loss in relation to the monetary value you want to put is a function of the lot size you are trading. So if you're trading a standard lot or any of these higher lots and you want to check the minimum pips allowed, in most cases, if you set an instant execution order, the least pips level, both for stop loss and take profit, is 5 pips. That's 50 points. But also, you can also confirm what the spread differential of your instrument is by going to your market watch. Please, here's my market watch to the left for those of you that might be confused about it. The market watch is where you have an indication of all of the possible tradable instruments and their corresponding prices. To each of the instruments, there's a spread allotted. If yours is not showing the spread, right-click on, if you're on MT4. If you're on MT5, when you click on that, hello, please, are we together? Hello, if you can still hear me, someone should type audio, please. All right, that's good to know. On MT5, if you click on it, you go to the last option, which is column. On that column, you now see a display of several other items you can choose to display on your market watch. Look for spread and select spread, and your spread will also be indicated there so that you can see ahead of time what the spread value is, and you can determine what stop loss level you want to use so that the spread will not take you out of the trade very fast. So this lets you know what value you should be targeting for your stop loss. If your spread does not show on your MT5, I've just said it now, right click on your market watch where you have your instrument displayed. Go to the last option there, you'll see columns. When you click on the columns, it will now show you a display of several other items you can decide to want to display on your market watch. Look for spread and check it, tick it, accept it, and to show the spread for you, so you can know ahead of time what the spread value is by any instrument you are trading. If you're also placing a pending order here, the same thing is applicable. Most often than not, depending on the volatility and how fast price is, you have at least about 5 pips to set up before. But at times it can be tight as 3 pips. Or you can be smart enough, set it first, and drag it closer to the price you want till it takes you to the closest possible price. Because at times, in having to go and come back, you may not get the price at the exact point you want it to be. So enter the trade first, then drag it gradually till it gets to your preferred price. But if not, it's within the range of about a function of the spread, because your price must always give an allocation or a consideration to the current spread required of that particular instrument, especially if you are on a standard account where you have a floating spread, meaning the spread changes intermittently. So you need to be wary of this so as to know the spread differential and then the pips allotted for you to be able to set your pending order so that it will be accepted. You can see on the USDJPY trade already, price is being rebounded back, which was why I said that price might still honor this ranging market within this channel to go up. So let's look for another instrument we can work with. Okay, US 100. All right, we've not touched any of the indices today. So let me just quickly touch US 30, US 100. I've moved over to US 30 chart. Please, if you can see my chart, I'm on US 30 now. Can someone just type US 30? Let me be sure that we're still following. US 30, I'm on the US 30 chart. If you're following, somebody should help us type US 30. All right, good to know. So on the indices now, and you can see that US 30 peaked a little, plunged down, and is on its way back up. US 100 is at its high, recent high right now. And here is the shocking realization. The indices, the US precisely, the US 30, the US 100, and the US 500 are subsets, meaning the US 30 is a part of US 100. The US 100 is a part of the US 500. So we expect these three indices to move in the same direction. The only difference should be their steep. But once in a while, they tend to cancel out this particular rule of correlation between the three of them, depending on the companies that have some major news or things that affect them. Hence, you can see that the US 30, as we have it here, has built up from the lower point here and cut off this range and is in this upper level and is also in range. Let me mark out the range point here. The lower level is already held by a verified support. I can see the upper level here at this resistance level too. So what this means is this. If you're targeting the US 30 right now, don't target instant execution. Wait for price to either break above this upper level here, as I've outlined there, at 38876, or it breaks below 38787. But breaking below 38787 is not enough for you to think of a downward movement. Rather, wait for price to break the lower level of that verified support. That is when you are sure it has made a clean breakout. In which case, a retest now turns this verified support to a verified resistance that will now hold price down. Then, on that retest, you can now have what? A short trade and follow this movement down up to the closest support. But on the upper level, allow price to break above 38876. If you're a conservative trader, wait for a retest. If you're one of those that's plunging ahead and can take some reasonable level of risk, you can have a pending order set above it, waiting for price to break free, trigger the trade, and go on the upside to the closest resistance here. And the closest resistance there, if you look at, that's about 66, 69 movement. And that's still something reasonable for you. Moving on to US 100, you will see a sharp contrast I've moved over to US 100 now. Please, I'm on US 100 now. You see a difference in the movement now that the US 100 has plunged and rallied. In the last 4 weeks, it's been on the upside, which is a beauty for it. And it's at a recent high now and at a verified resistance. Price on the US 100 is looking for a reason to retrace for a reasonable time. But so that you don't rush in at the wrong time, let's move to a lesser time frame and let me sketch out the same type of formation we've been seeing today, being the symmetric triangle. Look at it here. At the upper level, let me draw at the lower level also. You can see that in this case here, price has gradually broken free out of this symmetric triangle and is resting on the triangle, meaning it's on its way back to create these highs it has created before. Let me put a vertical line there to that precise point on. I mean, a horizontal line rather. So price is finding its way back to the upper level it has gotten to. That's at 19992. That's 19,992.76. So if you're not someone that is impatient, because see, let me be honest with you, when it comes to trading, patience is something you would need to learn. Every trader over the years has a nickname of patience. Patience should be part of your name right now. You're never in a hurry because you're not the one dictating the market. Here's the difference between professional traders and would-be professional traders is the fact that would-be professional traders or newbies or freshers just plunge into and keep running after price. Professional traders wait for price. They don't run after price. That is why technical analysis is using past price action to predict future movement, not present, future. You want to know what the movement will be in future because that's what guarantees your stable or sustainable profit. So in this case here, price has already broken free. I will not get into any trade on USD, US 100. Rather, I'll wait for price to get to that recent high, which has been outlined by 2 different points, which is 19,992.76. And expect your verified resistance to push price down. And from that level, you can think of what? Short trades, into some sell trades. It has a pending order there or an instant execution. And in which case, gives about 48, 49 movements up until this cross section of this symmetric triangle, which will also act as a support by the time price gets back there. And then you have a very tight stop loss above this verified resistance region here, which protects you on that trade. And you have a larger price movement in your direction than against you. But if price does not make it to that point and breaks below, it must break below this lesser trend line here, indicating an upside movement for you to know that price will be on a downtrend. So if it breaks below here, it will test it back and be on its way down. So that is that for US 30, US 100. You can keep that in mind when checking your US 500 and US 2000 also. We have just 5 minutes to round this up. Is 5 minutes to 9. It's almost 9 a.m. But let me see if you can still rush through to pick one more. All right, somebody's asking here, doing that you cannot trade USD JPY and USD CHF on your MT4. That is possibly because you are looking at the wrong USD JPY or the wrong USD CHF. Please, in your market watch, look closely. You'll understand or realize that some instruments are fainted. That means they are dark, like black in color, and has a plus sign attached to it. Those are the instruments you should be loading because a guest tells me on the standard accounts where you have a floating spread. So that's a possible issue you want to look at. Look for those instruments that are dark, black colored with plus sign rather than the fainted ones. Someone is asking here, why is Rally Trade's spread larger than other brokers? Sir, it depends on the instrument in question. You'd agree with me that not every instrument have the same spread. And I don't know which of the brokers you're making reference to, but arguably Rally Trade has the best, or also for conservativeness, one of the best spreads when it comes to Euro USD and D30 and a couple of other instruments. So I think you might be looking at the wrong instrument. Yes, maybe one or two instruments. Some brokers may be fortunate to have a tighter one, but also keep in mind that you might be on the standard account where you have floating spread. So whatever you might be seeing at that time might be a function of volatility and liquidity in the market, not the trueness or the stable spread across board. So once in a while, you need to check these changes so that you can pick the least possible spread and know the right time to trade that instrument. So that might be the confusion from your part, sir. Hello, Doing, please reach out to your account manager so that you can get an insight into this. If it's on your phone and you say you cannot see the USD, JP, and CHF with plus sign, that is because you are not looking in the right place. You on your phone, you have limited view of instruments. You need to add more instruments. So you need to find a way to add that instrument. So please reach out to your account manager so that you can be guided properly on how you can load the other instrument you're not seeing. Yes, David, we have a forum where we teach newbies from the scratch on how to trade. There are three ways to which you can attend our training classes. We have a physical one in all of the cities where we have branches, training centers, and hubs. So you can take advantage of the physical classes there. And for those of us that are too busy or not residents in these areas where we have our branches domiciled and our training centers, you can join our online live training session, just like this money market review you're hearing right now, which is a live broadcast. We have our trainings, our CFTP course, that's our classic financial trading program, where we teach the foundational learning to trading. Where is this market? What is it comprised of? What are the classes of instruments you can trade on? What are the right instruments to trade on? What is the right trading session? How do you buy? How do you sell? The three method of analysis or types of analysis are also taught, and how do you trade with them? And we also give trading softwares that will teach you how to use the trading softwares and strategies to make good trading decisions. So even if you cannot join the live broadcast, we have an academy portal where all of these are recorded videos are placed there so that at your own comfort, your own pace and time, you can take all of these classes as well. So please, David, do well to reach out to your account manager to guide you through on this. You get the link from the account manager and all of this will be resolved. Modesta, although we have already talked on Euro USD, please, this is a streamed training. Do well to go to our YouTube channel and you can watch a repeat of it for you to know what we discussed on Euro USD. I wished I would have been able to take additional instrument, but not with the time I have available. So let me just see if there's any other question that is direct here rather than going through the chat and making fresh analysis. All right, I don't think so. Every other question here I've handled. For those of us that drop oil and AED JPY and FRA 40 and D30, pardon me that I couldn't attend to your questions. That's because we have more persons towards the other instruments I've analyzed, hence we have to choose them, working by the laws of numbers. The larger the numbers for a particular instrument, that is what I'll be biased into analyzing. All right. Thank you for joining today's session. My name is Olabisi Olaleru. We'll see you some other time. Try to join tomorrow's session. Somebody else will be here to still analyze that for you, and you have Friday as well. Please make it a point of duty to let's join early enough so that we can have good participation and early lecture and point out this trade so that we don't have to drag ourselves back, because we started like 5 minutes or 8 minutes late into today's session, and that time would have been used to cover some other instruments. So please, let's make it a point of duty to work with 8 a.m. as the appropriate time for this lecture. Thank you for coming around. All right. Okay. I'll drop my number here for those of you requesting it. So you can reach out to me if you have any other question, or reach out to your account manager to forward you my contact details. My name is Olabisi Olaleru. Thank you for joining today's session. We'll see you on the profiting side. Have a blessed trading day. See you around. Bye.